All right, let's get rolling here this morning. I want to do a quick video, and then we're going to go over some setups. We do have unemployment claims coming out this morning at 8:30, and we have crude oil inventories at 11 o'clock this morning. Hey, Lewis. So let's go over crude oil. Let's take a look at the last setup here we had. Remember the time of day trading. I want to go over this real quick, and then we'll go over to the next setup. The time of day trading that we want to start trading crude oil, 7:30 to 10:30. That's for the S&P 500 or the NASDAQ futures or the Dow minis or gold, etc. 7:30 to 10:30. You shouldn't be logging in later than 7:45 Eastern Standard Time. This is Eastern. So that's the time of day trading. Okay. So that's your day trading plan to log in and look for the setups between that time frame. Typically, like yesterday and today, we're already off to a great start. You're typically done by 9 a.m. in the morning. So 3 out of 5 days, we are on average should have enough ticks by 9 a.m. in the morning. So an hour and a half of trading. If we do not, if it's a slow day, we can go all the way to 10:30. Today is 11 o'clock. It's crude oil inventories. So we're going to have to push it off a little bit longer in our trading day if you want to trade the news. If you do want to trade the news, we do have videos at daytradingthefutures.com. We want to be flat 4 minutes before the news is released if we have a long or short position into 11 o'clock. And then we wait around 15 to 20 seconds after the news release. And I have videos at daytradingthefutures.com. If you want to scroll back, start from the most recent ones, how to trade news events. I got 4 or 5 of them on there. They're around 5-6 minute videos. And it shows you how we get in the news event trade. Let's go over, I want to do this, do a quick video here this morning to show you the relationship between the J signal chart, which is this white Fibonacci retracement chart, and market delta. If you look at, right here on, we have the overall market delta as a grade 10 plate that shows the buyer sell imbalance. We don't look at that until we have a setup over here, either on the market profile black chart or the J signal white chart. I want to concentrate on the white chart here because it gave us a nice setup at 7:30 this morning. What you want to do, guys and gals, first of all, is with J signals this, if we have 2 market profile levels on this white, what's called the J signal chart, we have a high value area, which is in red, and we have a low value area, which is in green. We do not have the control point like we have over here on the volume and price profile. So the white chart's very simple. It's a very simple setup. Is that if you get outside of HVA, if you close above the high value area, this creates strength in the market. Any given market that you're trading, that is going to create strength. No shorts above high value. We're not allowed to take any shorts if we're outside of this high value area. There's no shorts. We're only looking for long retracements. So when you get outside a high value, it started right here this morning, earlier this morning. It first broke outside of the high value, and that created strength in the market right here, strength in crude. So you could see the first retracement with positive market delta, that got the low there with the stop 2 ticks below the swing low. And then our time of day trade right at 7:30, we continued up. Came another nice retracement here. Now, you like to look for retracements. You cannot break this black line on the retracements. If you break this black line after getting outside a high value area, then it creates a weaker setup. So you do not want to break this volatility line on retracements. But then we got the pullback to the overall Fibonacci dots start printing. When the Fibonacci dots start printing, you can see over here, the Fibonacci dots start printing. Oops. We had a buy setup right there. 301 was a positive market delta right where that entry is, right here, entry. So you can use the Fibonacci dots with the market delta to get in these trades. The stop's going to be 2 ticks below that swing low. So your entry on that last trade is 50.16, got as high as 50.37 or 50.38. So that's a nice little trade to the upside. So that's our entry. Our stop is 2 ticks below the swing low. Now, if the next bar, this next bar closes, if it does close red, you can exit the position at a small loss if you desire. because there's an order imbalance to the sell side. You should have positive market delta to the upside. Okay, so that's what we're looking at there. Now, what happened was we came up to high value area. This is high value area, and this is a great place to scale. The first place to scale is either on your automated dome or the first set of symmetry dots. And I went over this video yesterday. You can play yesterday's video. After you enter and you place your stop 2 ticks below that swing low, you can see the symmetry dots up here. Great place to scale your contracts. I want you guys and gals, according to my methodology, scale 50% of your position. If you do 4 contracts, scale the first 2. Your goal is try to get to the second set of symmetry dots if you do not get stopped out in the subsequent position. That's your goal in your second set of symmetry dots. Okay, if it comes down and stops you out in the subsequent position, then let it stop you out, break even +1. It's fine. If you're in a hard trend up, you can even leave it 2 ticks below the swing low. All right, what happened is we got up here, we got positive market delta all the way up. Positive market delta all the way up, and look what it came into. It came into high value area. High value area gave you a negative market delta. This is into a corrective wave that's doing corrective wave. Anything over 200 is a major sell imbalance. That is a corrective wave, so you can get out of your position entirely, or you can look at actually taking that as a corrective wave short since you're inside a high value area. Anytime you get inside a high value, the market weakens on a retracement back up. This is more an aggressive play if you wanted this one. So you could actually take it to the upside and downside. I prefer just taking this move for you new traders that do not know about corrective waves or counter trend trades. Counter trend trades happen only inside when we get inside of this value area. So when you get back inside of this value, break inside in this retracement, it would have to be something inside of this to take a corrective wave. You can't take, these are motive waves when it breaks outside. It's allowed to even come back down to the black line for continuation. But if you do break back inside, you do have a corrective wave set up. It will break back inside. It will not close outside of this red line. If it does not close outside this red line and you do get a negative market delta, you are allowed to take that as a corrective wave. So what the market has essentially done is essentially gave us a motive wave with the 5-minute trend setup. I mean, trend filter setup, trend filters up. This is the easy trade. You cannot miss these trades because look at the spread on the trend filter. What I told you yesterday in yesterday's video, the first thing you do when you log in, you ask yourself, what is the trend? And you look at this little, this moving average. Now, moving averages to me are worthless. You can't trade off of them, but you can use them for trend direction. This trend filter is built into this market profile chart. If it's angled up, you got to buy retracements. Yeah, that's just as simple as the thing you do. Is it you buy retracements to support on these market profile levels that are stacked over top each other, or you look for Fibonacci retracements over here on the J signal charts to buy. You're only going to have around 20% of the time you're going to have a corrective wave like it did right here, where you get inside a high value or inside a low value for being outside of it, and you can take a first retracement trade like that if you want. Corrective waves are more dangerous than motive waves. Corrective waves are against trend filter, and you can only take them if you get inside a J signal over here. You have to break out back inside and look for the first retracement. Okay, I prefer you guys and gals, which most traders do in the room, is take this wave pattern here. This is an Elliott wave number 3. This is the strongest wave pattern you're going to get. That's a 3 wave up. So this break retest, this is actually a 5 wave. 3 wave was earlier, but the 3 and 5 wave is your largest impulse wave. These were the 2 largest legs on J signal, called them both. Here's a wave 5, a wave 3 that happened earlier with J signal. That's a wave 3. That's a wave 5 and Elliott wave. These are impulse waves, and they were all directed by the Fibonacci dot retracement. The reason you don't have to know a lot about Elliott wave, but know this, that the 3 and 5 waves, your biggest wave pattern on an impulse wave, called an impulse wave. So your biggest, typically what happens is, and it's like almost a self-generating trade with Elliott wave. When you get outside of high value here, when you get outside a high value red, it naturally creates a natural retracement for number 3. If I break outside of LVA and I retrace, then it naturally creates a number 3 wave pattern short. So this created a wave pattern 3 and 5 wave naturally, just breaking outside of high value area. It creates an impulse wave. And that works on all markets. So if you're watching this on your own system and you have this on your own system, know that you're probably getting into a wave 3 on your first break outside a high value, or break below low value, because that is probably going to be your largest wave, 3 wave and 5 wave. These are your 2 largest Elliott wave patterns, right here and right here. And that is a beautiful Elliott wave pattern right there. That's a wave 5, and they're about the same size. Wave 3 and wave 5 are about the same size. 3 can be a little bit longer than 5, but typically your 3 waves are going to be larger than your 5, but you can see the duration in the move was about the same. So if you know you first break out of wave 3 on a high value area breakout, then you know your first retracement is probably your longest leg on a push. Vice versa, your second retracement probably going to be the last leg on the push, and then you're going to see a corrective. So if you know anything about what I'm teaching you now, then you understand that this wave 3 started here, wave 5 started here, wave 5 is the last leg before you go into an ABC pattern or correction, and that started the corrective wave. So my system essentially caught the low here on a wave 3, caught the low on a wave 5, and caught the high on an ABC pattern, possibly going into an ABC pattern short. So these 2 are motive waves. This is with 5-minute trend. These are the 2 easiest waves to take. They're motive waves, they're impulse waves. Hey, Kwame, they're impulse waves. They're with 5-minute trend. These are the 2 easiest waves to take. I want you to concentrate. If you're a new member in the room, I want you to concentrate on impulse 3, impulse 5. Okay, you do get the corrective. This only happens, I'm telling you, around 20% of the time. You get a corrective wave, but listen to me. A lot of traders fail. I train hundreds and hundreds, if not thousands of traders, and I'm going to tell you one thing. I used to train traders actually at my office. They'd pay me an X amount of dollars. They'd come to my office. They'd watch me trade. I would teach them, and all those indicators I saw that those guys brought to me were worthless because they did one thing. They counter-trend traded the market. We're only counter-trend trading around 20% of the time. Around 90% of traders either counter-trend trade, typically from active trader that used to be around in Stocks and Commodities magazine, or they are scalpers. Those 2 traders fail if they're retail traders. You cannot be a scalper in this market, and you cannot be a counter-trend trader, or you'll get wiped out. Divergence doesn't work against trend, okay? It doesn't work. All these indicators that show divergence against trend, it just doesn't work. I love divergence with trend, but divergence against trend, a lot of these systems have that. The MAC, moving average convergence divergence, doesn't work, right? It's a lagging indicator. Moving average crossover systems, they don't work. I don't care if you have a daily chart that matches up with a 5-minute chart, that matches up with a 60-minute chart. You see a lot of trade rooms that do that, and moving averages are worthless. The only thing that you and I can count on is market profile. Market profile is the volume and the price of the market. And what it does, it spits out these support and resistance levels. And when we break out of a high value or low value area, what it's trying to do, this system, this algorithm, what it's doing is it's trying to find the wrongly positioned traders. When we got this wave 5 this morning, that caught all those wrongly positioned traders short. We got this wave 5 pattern here. What it's doing is catching all the wrongly positioned traders short. When it did the corrective wave, it's doing right now with negative market delta. What this is doing is now it caught all the long positions long because you're inside of it and you had negative market delta. Look at negative market delta right here. Right here. Negative market delta right there. It caught all the wrongly positioned traders long. They got top heavy because we're already into wave 5. Wave 5 is the last wave up before you go into an ABC correction again. So, it lets you know high value off this white chart. It lets you know when you're into a possible big move up on any given market. Okay? But wave 3 is first, then it's wave 5, then you go into a correction phase, and then it can resume trend again. All right? Now, I do have support down here at the control point. Control point, I do have support. Right here, it bounced early off low value area on my black chart. I do have support at the control on a second test at just below, or just at 49.95. So watch that level in the pullback. I got 85, 87, 2 times stacked area. I will look for another buy bounce at this level if it comes up.